Good evening, all. This is Shay Horowitz, ShogunTrading.com. This is our free weekly newsletter. We talk a little bit about the market. Last few weeks, I talked about how the market is creating a top. I said this is the left shoulder, this is the head, and this is the right shoulder. It was a lower than the head or the left shoulder. And that signaled a start of a downtrend. And we did get our first wave down. And now we're going into profit taking, where we are coming back up. Profit taking is due to quite a few reasons. One of them is pure profit taking. The fact that people are riding the short side and then decided, that's enough profits on the short side, and he wanted to ring the register and take some profits, which causes, of course, the market to come back up. The other reason is because more fundamental reasons is, for example, Saudi came out and said that oil prices are way too high and they're going to start pumping out more oil, and they're going to do something about oil prices, which of course causes the market to come back up. Fed speeches, economic numbers are coming out. All of that makes the market come back up. Now, what I'm waiting for is I'm waiting for it to round back down again. When it rounds back down again, this is what I'm going to short again. This is my short point right here. That's what I'm waiting for. So we took profits on our first wave, and now we're coming back up. Let me show you some trades real quick. Lehman Brothers, for example, we shorted 41.37 and we rode it all the way down. That's one of the financial stocks that, of course, got hit really hard. From 41.37 down to 22 on Friday. It was actually much lower on Thursday, down to 27. CRBC is another stock that we shorted, another bank, from 8.03 all the way down to the $3 level, 3.33 level, I'm sorry. So, quite a ways down. We also shorted the commodity exchanges, such as the CME, from 451 down to the 380s. We also shorted the NMX, which worked out very well for us, all the way from 90 down to the 81.80. That worked pretty well for us. We also had some like BX, for example, from 1836 down to 17. We had ISRG. That gave us just a little bit of a trend, not too bad. We had dry ships that worked very well for us, from all the way from 89.70 all the way down to the $70 level. That's a 19-point trade on an $89 stock. We also had Yahoo, and Yahoo is the stock that we recommended, $26.95, and we came down on the first wave. And then we got stopped on the break even, and we keep a very tight money management of this, but anyone that re-entered this specific trade made out like a bandit when it actually came down and broke down. My point in showing you all these trades is the fact that you can take specific sectors that are going to suffer on a certain downtrend, and you can play with the market, time the market, make sure that you're catching the right wave when the market breaks support, when the market is making these lower highs, and you're able to capitalize on those. So we have Lehman Brothers, CRBC, which is a bank. We had the commodity exchanges and so on, and worked out pretty well for us. Of course, once the market comes down, everything comes down, and it works pretty well. We also had some nice trades on the upside. For example, WDC, where we went long at 36.06, and it went all the way up to the 40 level. But, that's a smaller trade. It's on the upside while the market is going down. And it's basically because it's a technology stock and it's a little bit of a different sector. But what you want to do is you want to time the market with the sector, with the stock. The best way for you to think about this is whatever your move is, whatever you think the stock is going to do, 60% of the drive behind it, 60% of the power behind it is going to be the market itself. 25% of the power behind it is going to be the sector, and only 15% is going to be the stock itself. So you pick the market first, and then you look for whatever sector is going to work the best for you, and then you pick the weakest or the strongest stocks in that sector. If you're looking for the short side, you look for the weakest ones. If you look for the long side, you look for the strongest ones, and that's how you take advantage of these trends. Now, I am sitting on the sidelines right now because I'm waiting for the market itself. If you look at the S&P 500, I'm looking for it to finish its profit taking, come back up, round off, and then come back down. And I'm going to be shorting some more right at this level. We have oil prices that are going to be a big deal this week. We have initial claims with crude inventories. We have some more inflation news that's going to come out. Futures are basically even overnight. They're not really moving. Even though the Saudis came out with comments, I don't know if they believe the Saudis or if they want to see some action on it. But I think that's what's going to drive the market. And I think the safer trade right now is to stay on the sideline and really wait for either the trend of the market to resume, like this, or for something to happen due to oil numbers. Anyway, we're doing very well right now. We are waiting for the next move, and we'll name all the stocks that we're going to re-enter to our newsletter subscribers. Have a great week. Make sure that you focus on the market first, and then the sector, and then the stock. I will talk to you next week. Take care.